and welcome to episode 49 of Mo Money, the investing and economics show for millennials by a millennial, where our goal is, of course, to educate, entertain, and empower a new generation of investors. I am, of course, the host of this wonderful series, MC Mo. We've been on a brief hiatus, but now we are back on our Grizzy Mo Money X. Where you at? Now, this week we're going to be talking about something that I've kind of been putting off, mostly because I didn't really know that much about it, and I didn't think it was very important to talk about. But now the topic has gotten so large and nearly mainstream that I could not ignore it for much longer. I'm, of course, talking about Bitcoin, the world's first cryptocurrency, or virtual currency, online money, whatever, aka that you wish to refer to it as. Bitcoin for the past 9 years has been kind of a fringe world, a joke amongst bankers and other people in finance, as a fad, but it has endured. It has proven itself as a real disruptor to modern banking and a force to be reckoned with. When you're looking for information on Bitcoin on the internet, it's hard to find a good source. Most likely you're going to run into some really douchey, hipster, white bro guy with a flat bill hat on that says like crypto or rebel or revolution, or some guy who just tells you how amazing Bitcoin is, how you should join the revolution, blah 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 blah. These guys are everywhere and they're super annoying. Bitcoin enthusiasts are basically the vegans of the financial world. How do you know someone owns Bitcoins? Oh, because they're gonna fucking tell you about it all the time.
Oh, I don't get paid in dollars. I asked my company to pay my salaries in Bitcoin, so yeah.
Then you'll have equally douchey people going against Bitcoin, calling it a joke, a fad, unstable. They say it's only good for funding terrorism and drug addiction and prostitution. These are mostly economists, bankers, etc., people who are part of the status quo banking system, who see this as a threat or are so ingrained in the current banking system that they are too naive to recognize it as the threat that it is. Anyways, let's get down to the basics of what Bitcoin is. Now, I'm sure all of you remember episode 26 of Mo Money very fondly, titled, It's All About That Money. In that episode, we broke down the essential meaning of money and what makes it different than currency. We based the episode on the definition by Mike Maloney, that money is 7 things. 1, a medium of exchange. 2, a unit of account. 3, portable. 4, durable. 5, divisible. 6, exchangeable, fungible. And 7, a store of value. Now, gold and silver have historically been revered as the only forms of real money for thousands of years. You can melt them into small coins of different sizes, put them in your pocket, they're durable, and people have valued gold and silver for centuries, so they've always kept their value. Bitcoin looks to replicate itself on those same principles that made gold and silver money for centuries. So first, 1 Bitcoin can be broken down into fractions of a Bitcoin. If you cannot purchase one $2,000 Bitcoin, that's fine. You can purchase fractions of one, thus making it number 5, divisible. Also, able to be a unit of exchange. You can exchange Bitcoins for goods and services. Next, some people store Bitcoins directly on the servers of their desktop computers. But for most people, they are stored on other companies' servers and access them through apps like Coinbase, BitWallet, or some other service. Bitcoins are all connected with each other, so the system can verify how many you have, who you send them to, etc. Of course, they won't know it's you exactly, but they'll know your username code thing. The system is constantly keeping track of Bitcoin transactions within the system and storing them in the blockchain. Thus, Bitcoin is number 2, a unit of account. The blockchain is essentially just like a huge file that records all the transaction of Bitcoins. It's like one super long receipt that just keeps adding to itself over and over and over and over again. Once a transaction takes place, the server will verify that you have enough Bitcoins to send for the transaction and approve it, then record it. This prevents people from spending Bitcoins they don't have, or trying to double spend their coins, or trying to counterfeit coins. Bitcoins are a peer-to-peer system that look to eliminate the need of banks. If you want to send money to a friend in France, with a bank it'll take minimum 3 days for them to verify A, that you have the money, and B, you nor your friend are terrorists or drug lords. Bitcoins have no middleman. If you send someone a Bitcoin, it'll arrive to them in seconds. As long as you have a phone, you can use your Bitcoins at places that accept them, which is becoming increasingly more and more places and more people, thus making Bitcoins 3, 4, and 6 durable, exchangeable, and have the same amount of purchasing power. They are durable. They don't shred like paper money. The only way you can destroy Bitcoins are if you lose your hard drive which stored your Bitcoins, or forget your password to your app account. Some guy once threw away his hard drive accidentally when Bitcoins were worth pretty much shit. That hard drive is now worth $7 million. So be careful. Finally, number 7, a store of value. Did you know that the US dollar has lost over 90% of its value since 1913? Why is that? It is because the Federal Reserve, by the power vested in it by the US government, has printed more and more and more money, essentially making each dollar worth less and less every single day. This really affects poor people who mostly use dollars and aren't invested in stocks. So as they sit and save in their bank account, it's losing value. This is called inflation. The Federal Reserve tries to keep inflation at about 2% each year. So if you put your money in the bank and it earns 0%, which is standard nowadays, in 1 year it'll be able to buy 2% less stuff than the previous year. It is essentially a hidden tax. So what makes Bitcoin better or different? What makes it better is 21 million. That's how many Bitcoins will be created, and that is the limit. There is no government or central bank, no overall authority that has the power to decree that more Bitcoins can be produced. After 21 million, no more Bitcoins will be able to be mined. Currently, they have mined about 16 million Bitcoins, last time I checked. The reason for this being if they kept creating Bitcoins, it would lose value and people would lose confidence in its value. The fact that only a certain amount of them will be mined and produced ensures their value. It was the same way with gold. Gold is rare and it's hard to mine. So people understood that's what gives it value, the rarity. People use computers in order to unlock or mine Bitcoins. People who mine Bitcoins are rewarded with shares of the new Bitcoins, and they introduce new Bitcoins into the system. Mining Bitcoins was designed to ensure Bitcoins would be slowly introduced into the system to prevent inflation. Also to prevent one person or large entity from buying up all the Bitcoins at once and essentially ruining Bitcoin due to just hoarding all of them. So now that you hopefully understand Bitcoin at least a little better than you did before, if not, rewatch the video and come back to this point when you fully understand. Let me answer the question I'm sure you're asking. Should I buy Bitcoin? My answer is yes, but it's not black and white. I feel like there are much better and less risky investments out there. Bitcoin has a great idea, but it is still highly speculative and volatile. Prices can shoot up 10 to 12% in one day and then down 30% the next week. It is not for the faint of heart, but in my eyes, the price of Bitcoin is not something you should worry about on a day-to-day or even a week-to-week basis. It is an investment. It's a way of guarding your wealth, not so much a way of increasing it. The reason people purchase gold and silver and should purchase Bitcoin is not in hopes of a 5, 10, 20% return. It's that if the dollar drops 5, 10, 20%, their purchasing power will remain the same. That's why I would say if you want to get into Bitcoin, don't trade them. Buy some. Don't put all your money in it. Not half, not a quarter, maybe 1 to 3% of your investable money, 5% max. Add a little bit to it when you can, and just hold on to it. Now the best case scenario is if you invest a little, you have Bitcoins. Say all 21 million get mined, the price of Bitcoin skyrockets, stores and websites all start accepting Bitcoins, nobody uses banks anymore, people have more money because of less inflation and they pay less fees for their money, businesses can transact easier, blah blah blah, utopia, everybody's happy. Now, worst case scenario number 1, the government gets involved and starts regulating it. They start making rules on how it should work. They start increasing costs. They start taxing transactions. Ugh. Worst case scenario number 2, the government gets involved, shuts it all down, forces everyone back into the banking system and into dollars. The price of Bitcoin plummets. Some people are able to get out with a little bit of money, but the value of most people's account are left decimated. Third worst case scenario, another cryptocurrency arises that pulls market share away from Bitcoin and ultimately overtakes it, making Bitcoin worthless. And many other cryptocurrencies have already arose to compete, such as Ethereum and Litecoin. These are the 3 worst case scenarios, and all of them are as bad as the next one. Bottom line, Bitcoin has come a long way since 2009 in terms of sophistication, credibility, and popularity. Mel B, former member of the Spice Girls, was the first artist to allow fans to buy her music with Bitcoin. Lamborghini allows people to buy their cars with Bitcoin. Some bars accept Bitcoins, airplane tickets, and even some charities accept Bitcoins. Online money is not a fad, it's a wave of the future. People want control of their money to do what they want. They don't want to store it in the bank, where the bank may gamble it away in the stock market or make them pay heavy fees for guarding it. Internet currencies are decentralized. They are at the mercy of no one power sphere. They are the money of the people. This is what makes Bitcoin so attractive to so many people. People have a deep mistrust of banks, and for good reason. Financial talking heads are already trying a smear campaign saying that it enables crime, but crime has been going on since the creation of laws. Stopping Bitcoin will not stop crime. It won't won't even make a dent in it. Criminals will always find a way to break the law. Banks broke tons of laws leading up to the financial crisis, so is breaking the law really that big of a deal? I mean, honestly, who cares? Stop being such rule-following pussies. Anyways, Bitcoin is definitely a start of something big. We'll see a shift in banking in the coming years. No need to jump in headfirst or worry if you're not involved yet. Barring a massive financial meltdown, the shift will be gradual. But hopefully you have learned today at least enough of a foundation to go out and expand upon, maybe read articles and understand what's going on. I am far from an expert, and I'm sure I misspoke on a lot. And I know I missed a lot of things, but I was just going for the basic concepts and theories, and I think I knocked that part out of the fucking park. And I did so in an informative, non-douchey, pretentious way. Take notes, people. Thank you so much for watching another episode of Mo Money. You can find new and classic episodes right here on our YouTube page. For now, don't forget to like, comment, subscribe, and share. Follow me on Twitter. Follow me on Instagram. Like me on Facebook. Check out themomoneyshow.com.
Mo Money, signing out.
I'm just shooting on my shots now, hard to be humble. When you riding with your top down, picture me rolling up in my S of 500 bands. Mommy sip on the Bourgeois while the hair blowing in the